Hi, this is Roger Conrad. I'm co-editor of MLP Profits with Elliott Gue. And what I want to do today is basically just give you a little update of how things have been going with the publication. We've been in business now for about 6 weeks, and we've had some gains in some of our picks. Basically, we've been filling out the 3 portfolios, a conservative portfolio. We now have 5 members in there. The latest one we added last week, Magellan Midstream Partners, which is a very nice situation. Again, mainly those are in gas storage, pipelines, those types of businesses, fee-generating businesses. They actually have a very interesting deal where they're subsuming their general partner in the company, which will mean, I think, tremendous upside down the road for their cash flow. The conservative group, another way of looking at them is the 8% club. They're basically, again, recession-proof MLPs that are generating strong income, paying dividends, averaging around 8%, and are growing those consistently year after year, and even in most cases quarter by quarter. So that group now has 5 names in it. We'll probably add a couple more as time goes on. The growth group, a little bit higher risk, and mainly some of the businesses that they do are things like gas gathering, energy gathering, which do depend to some extent upon energy prices and to some extent upon, therefore, the level of economic growth. But they tend to yield in the 12% area. So again, you get a little bit more reward for a little bit more risk, and we're looking for some pretty big gains out of those. And then the aggressive group, which are heavily involved in energy production and related enterprises. So and those have actually been our biggest winners so far, which is fairly extraordinary considering the decline in energy prices since we began this product. Again, we're going to continue building out those portfolios. I want to call your attention to another feature of the letter, which is the how they rate table, and hopefully many of you have discovered this already. But this is basically our rating for 100 plus MLPs, pretty much every MLP traded in the United States. That's investors can purchase. And what I want to draw your attention to there is not so much the buys, but the sells. We have about 30, roughly, sells in this list. And if you have been building a portfolio of MLPs over the last couple of years, you hadn't been getting this product, I urge you to go down this list, look for the ones that we have rated sell, our unofficial blacklist. These are MLPs you're going to want to get out of right away. I think in many cases we've already seen a couple of dividend cuts from this group. We've also seen one of them delisted, and again, this is just in 6 weeks since the product's been launched. But again, very, very important for people to go in there. It's often just as important to avoid the bad stuff as it is to get the good stuff. So get out of those, get into our portfolio picks, and again, you should be doing very well. The last article the last feature of the site I want to call your attention to is an article written by Elliott Gue, the other editor of the publication. And he's writing about something that I think is very important for all MLPs, and that is the fact that credit has just become, over the last 3 or 4 months, considerably easier for these MLPs. The one we added, I mentioned in the conservative holdings, Magellan Midstream Partners, did a bond deal, a bond offering for 10-year bonds at a 280 basis point premium roughly to treasuries. That's extraordinary because it's rated BBB, and if you look back 3 or 4 months ago, even A-rated paper, even A-rated companies were only able to issue bonds at premiums of 600 basis points and more. So the cost of credit's come way down. The cost of credit's very important for MLPs with new projects and making those cost economic, and the new projects are, of course, what adds to cash flow, what boosts distribution streams. So again, a very, very bullish development for particularly the MLPs that we have in the portfolios. And again, just to remind you again, you want to be in those, you want to be out of the real garbage in the business. We're still seeing a shake out there, and again, you want to get out of those that we've had rated sells. So anyway, thanks for tuning in, and I appreciate it, and we'll look forward to talking to you next time. Thanks.